Hey friends, my name is Dan Keller, branch manager and mortgage advisor at CrossCountry Mortgage. Hey, I'm excited and I'm honored to be your mortgage guy. This is where I start with every single one of my refinance clients right here. I know it's a 7.5 minute video, but I'm gonna ask you, buckle down for a few minutes. You're gonna look back and you're gonna find this incredibly valuable. See, what I've done in these 3 steps, through years of refinancing homeowners, thousands of homeowners, and partnering with some of the best financial planners and economists in the United States, is we put together a process that is guaranteed to save you money, add strength to your retirement portfolio, and deliver a process that is simple, quick, and smooth. One that you'll want to tell your friends, your family members, and coworkers about. So let's go ahead and get started. You know, one of the things that came out of COVID-19 was a massive refinance boom. And as we helped hundreds of homeowners in a very short period of time, I learned some alarming things. I saw some things that was very, very concerning to me as a mortgage professional. And I blame it on our industry. I blame it on the big banks and credit unions that just turn and burn clients and commoditize the mortgage process. And the reason why this alarms me is because your mindset that you had when you took out your mortgage 3, 5, 7, or 10 years ago is not going to serve you well in 2020. And here's why. In 2020, we are equity rich. What that means is in 2015 and 2012, we had numerous, hundreds, maybe thousands of Americans get savings opportunities crushed because of a low appraisal. We're not seeing that today. The other thing, number 2, we are in a very healthy income and employment environment right now in the Pacific Northwest. Number 3, we are in a 15-year, 20-year, and 30-year fixed rate environment that is in historic low times. Financial planners right now are using mortgages as a big part of their financial planning conversations. And so when I say the mindset that you had when you took out your mortgage isn't going to serve you well, I mean it. It's not going to get you to the next financial steps in life. This information is going to help you become more aware of that. This information is going to help you design the perfect mortgage for you that will have you come out on the other side, whether that's 5 years, 15 years, or 30 years from now, in a better financial position. So I need a couple of things from you in order to get started. 1, I need a copy of your mortgage statement. And 2, I need to understand what your goals are. I'm going to send you, or I've already sent you an email with those 2 requests. The reason why I need your mortgage statement is I need to understand what you're paying on a monthly basis and how you're paying your mortgage, how your escrows, your taxes and insurance, and if you have PMI, how that's getting paid. Excuse me. I need to understand your escrow balance. See, that escrow balance is your money. You're going to get a refund of that when we fund your mortgage from your existing lender. And we're also going to have to set up a new escrow balance. So I want you to see that comparison of those closing costs so you can see that they offset each other. The next thing I need from you is to understand your goals. Are you looking to go from a 30-year fixed rate mortgage to another 30-year fixed rate mortgage? Or are you looking to go from a 30-year fixed rate mortgage down to a 20 or a 15? Or are you looking to pull some cash out to pay off some debt, or maybe to put some money into your property in regards to upgrades or improvements? Once I have this information, I can then begin working on designing a mortgage planning worksheet, which is step 2. What I love about step 2 is this is where we spend the most amount of time together, and this is where the rubber meets the road in regards to designing the perfect mortgage for you. I love this step because I get to use some software called Mortgage Coach. What I love about Mortgage Coach is that it allows me to go 3 levels deep, where most mortgage professionals in our industry stay at the surface level and only look at your monthly payment, which we're going to look at. That's level 1. But level 2, I'm going to look at off to the right. There's some charts that I made for you that's going to give you a 5-year savings analysis. Below that, I'm going to give you a 15-year savings analysis. What this information is going to do, it's going to help you better understand whether or not to pay discount points, whether or not you should roll your closing costs into your new loan or pay them up front in cash, when to set up your first payment due date. This information is crucial to designing that perfect loan that I can then send loan disclosures out to you, and then we can prep to lock your interest rate. But before we do that, I always like to have this conversation, and this is so valuable. I share this information with all of my first-time homebuyer clients as a part of my 6 Steps to Financial Freedom packet. You as a homeowner, I want you to use this information as a financial checkup. See where you're at. See if you're on track, and if not, maybe this information will allow you to get back on track financially. But there's 6 steps to financial freedom. Number 1, track your numbers. Know what's going in and coming out and what's left over every single month. If you aren't tracking your numbers, you can go to budgetwithdan.com. You can download my free Excel worksheet. I've been filling this out at 44 years of age for 7 years, every single month. It's a complete game changer financially. Number 2, I want you to become debt-free with the exception of your mortgage. Number 3, have a rainy day account. I explain all of this at budgetwithdan.com, but I want you to have a rainy day account with a $5,000 to $20,000 balance in there so that you can weather a storm if you hit one. Number 4, make sure you're contributing to your 401k, especially if your employer matches. Number 5, invest in the stock market. Now, don't make the mistake I made. If you don't understand stocks and you don't have a financial planner, you can still invest in stocks. I show you how at budgetwithdan.com. Number 6, once you've done steps 1 through 5, you can now begin prepaying your mortgage. So many homeowners make the mistake of early prepaying their mortgage. You can, but you can also use that money to pay off your debt, max out your 401k, or invest in stocks as well, which will help get you to financial freedom quicker. All right, so now that we've gone through steps 1 and step 2, step 3 is locking in your interest rate. What I need you to do, I've already sent you an email that's going to give you the link to begin the application process. Fill out the secure online application. That allows me to create a file. That allows me to order an appraisal, send out disclosures to you, order an appraisal, or apply for an appraisal waiver, and then lock in your interest rate. This entire process might take 20 to 30 days. Listen, I'm so excited to be your mortgage guy. I'm excited to walk hand in hand with you, and I promise you, if you follow this program to a T, you will come out on the other side in a much better financial position.